Right. Just before we get to Nilesh Jain, Alex, would love to get in Nirav Asher on this list of companies, Nirav, wherein there has been actually a serious earnings upgrade that has come in into some names. You probably heard Somit speak about these. Anything that stands out for you from this list?
Well, I think I would be very cautious at this point of time because we've seen some companies, it's been such a fluctuating fortunes that suddenly the guidance has gone upside down. So I think I would like to quote one company called Aircon International, where the commentary has been so disturbing that you are making a 7.2% net profit margin, and suddenly the company talks about a 1.5% to 2% fall in the margins, decline in the margins going forward, and no confirmation whether there is going to be an improvement in the margin also. They are hinting at a continuous decline in margins going forward. So we've seen quite a few instances of this sort. So I think while there have been upgrades, but suddenly the whole picture has turned upside down. So we would be very cautious before going in for or believing in this kind of commentary, especially in this volatile scenario.
Okay, so having said that though, at least on the top of the list you have Nalco, and seemingly based on the EPS upgrade for FY25 and then 43% FY26. Let's just pull up the last 3 months chart if we can on Nalco, just to see the kind of price action that you've had during a period where the Nifty 50 and indeed the broader markets have corrected anywhere between 12% and 19-20%. You have this stock that has also dropped about 22%. Just to follow up then, Nirav, on Nalco in particular, since this is the one that has the highest EPS upgrade in the current financial year and in the next, 43%, does this not look attractive to you?
Well, I think as you rightly pointed out, there's been a 22% decline. Had this upgrade not come, I think we would be more than 50% at this point of time. So to my mind, the price damage has been restricted on account of this upgrade.
Fair point. All right. Let's bring in Nilesh Jain as well, who's head AVP Technical and Derivatives Research at Centrum. Nilesh, very good morning to you, and thanks as always for joining in. Let's talk about what you make of that base that seems to have formed very close to that 22,800 mark, which Neeraj also pointed out this morning. It seems like the market is looking at that and respecting it. But the question mark arises, today is likely to be a volatile day. Does that happen today as well? And what if it doesn't?
Morning, Alex. Morning, everyone. So basically, we have seen Nifty has defended its 22,800 mark in the spot levels comfortably in last 4-5 sessions. Even in the month of January, we saw a free flow of 22,786, and soon after that, we have seen a strong rebound. But this time looks a little different, and we are witnessing a constant resistance, which is shifting at the lower side. So immediate resistance now is placed at 23,000 till the time Nifty unable to cross the same. There are high possibility that Nifty may break below 22,800 going forward. But as of now, from intraday point of view, looks like another day of consolidation, and a tight range could be 22,800 to 23,000. Whichever side it will break, we can expect another 200-point move immediately in that particular direction. So better to focus on stocks. On index front, if you talk about confidence that is coming in the Bank Nifty, so Bank Nifty structure looks more positive, and we have already seen an outperformance yesterday, so we can expect a follow-up to continue towards 49,800 to 50,000. So any dip can be used as a buying opportunity, keeping a stop loss below 49,000.
Okay. So so if that's the view, Nilesh, and because yesterday was the first day of an outperformance of the small cap space, right? My question is, what is your trading strategy today on specific stocks? Are they small cap in nature, or are you sticking to large caps? Buy or sell, what have you?
So the focus should be on quality stocks. So sector specific is something that we are focusing. So power, energy, this space is looking attractive. Tata Power, NTPC, both the stocks are looking good. So NTPC is something that is looking attractive at current level, given the kind of formation that is formed on daily time frame chart. It looks like a double bottom, and we can expect a follow-up to continue towards 324. That's the immediate target, and stop loss can be placed below 309.5. Another space that is looking attractive is NBFC, and within that space, Cholamandalam Finance, particularly this counter looks like forming a rounding bottom formation. Looks good for a follow-up to continue towards 1430. So that's the immediate target in the Chola Finance, and stop loss can be placed below 1341.
Okay, all right, Chola. Okay, let me go across to Nirav on a couple of these developments, major developments that have come through, right? On my list, Nirav, I had Cyient Limited, particularly because you have the announcement of a new chief executive officer and ED. And this is a gentleman who has been with HCL Tech for a period of 3 decades. So he brings a rich experience to the table. Would you say that this is a sentimentally positive impact? And the question mark remains on the earnings, right? Because ultimately part of the reason why the stock crashed was because of a very weak Q3.
Well, yes, I think leadership can definitely make all the difference, and of course, it can navigate the company from the challenging times which it has been facing. So I think, but any progress which happens is definitely going to be a slow and steady one. So it will be a recovery is definitely going to be a work in progress. It might take some time.
Talk to me about this one, and Nilesh, I'll come to you on this one. Cyient, you've seen a stock getting beaten down. Of course, a wide variety of stocks have also gotten beaten down in the process. In the event that you have an upside today, would you suggest a short-term trade on this one?
Absolutely. So yesterday we have seen a good build-up on derivative front in this particular counter, and for the third consecutive session, we have seen a pullback. And interesting development on technical front was that this particular counter has crossed its 21-day short-term moving average. So structure-wise looks positive. If at all it crosses above 1480 today, then high possibility of moving towards 1520 to 1550. So a trade can be initiated at current level, keeping a stop loss below 1440. And buy and decline should be the approach till time it doesn't break below 1440. High possibility of counter moving towards 1520 to 1550.
Okay, now I want to put a bit of a focus on the MFI stocks and Credit Access Grameen in particular, because the stock was down yesterday. And we'll do a chart check as well. But Nirav Asher, I first want to come to you on the Goldman note. Goldman has put out a note for financials by and large, but they say that their channel checks suggest that the collection efficiencies have dropped in Karnataka, and their belief is that a portfolio stress and uncertain outlook is not adequately priced in, and therefore a stock like Credit Access Grameen could be significantly impacted. Now, the stock was already down 7.5% yesterday. And what holds true for Credit Access might hold true for other MFIs as well, right? Because the MFI loans are a sticky issue. How would you approach this pocket of stocks, and in particular Credit Access Grameen?
Well, yes, I think typically all these issues tend to get magnified when when we start to see some signs of stress in the economy, and I think more or less it's related to the developments which we have seen in the economy slowing down in the last 3 quarters. And I think it could definitely, what we are beginning to see in Credit Access could have a spillover effect on the other MFIs as well. So I could see valuations move under a lot of stress going forward as far as this particular category of stocks is concerned.
Credit Access individually, Nirav, do you track it?
No.
Oh, you don't. Okay. Nilesh, can I request you to do a chart check, because the stock was already down 7.5%. Now, is it, if the broader markets are showing outperformance and the stock is down 7%, that something is wrong there, right? How are the charts looking? Is it primed for more downside, or is it near some key supports?
So the stock is in a gradual decline since a year now, and constantly forming a lower top and lower top formation on the weekly time frame chart. In between, we saw some pullbacks, but those pullbacks are what sold into. The structure looks weak. The counter is trading well below all long-term and short-term moving averages. We have also seen a sell crossover on MACD. So structure-wise, looks like stock is heading towards 850, 820 on from a short-term point of view. So any pullback might get sold into, it's better to avoid taking any contra bet. There could be possibility of a 10K bounce, but better, stay away for the time being.
Okay, stay away from credit axis for the timing and for the time being. And so that's on the technicals as well as on the fundamentals based on what we've been hearing over the past several weeks. We have to slip into a very quick break, just about 5 minutes away from opening though. And we'll be back before that to tell you about more stocks that you should keep on your radar. Do stay tuned.
Back with India Market Open right here on NDTV Profit. It's difficult to predict how we will do during the day today, simply because we didn't quite factor in the kind of bounce that we had in the Indian markets, at least at the broader end of the spectrum yesterday. So bear that in mind. But we'll likely start off on a flattish note. The question only is, can broader markets outperform? That'll be the key thing. Also, viewers, just a sneak peek into the conversations that we will have today, though I'm sure on the right hand side of the screen or the left hand side of the screen you can see some of those. But at 9:25 we'll have a conversation with Aditya Khemka of Incred on pharmaceuticals, because pharma was such a big deal yesterday. Somewhere around 10:10 we'll have a conversation with Trin Nguyen, who is a global economist but also looks at markets and will be and she was very bullish on India earlier. Will be interesting to understand from her if she still remains constructive or no. But for now, in conversation with Nilesh Jain and Nirav Asher, we've discussed a few stocks with them. Time to discuss a few other newsmakers in the session today. Nilesh, Bharat Forge, there is a fundamental news flow to it, but technically, after seeing that bit of a sideways move and a corrective move, do the charts show any promise?
So could be possible that we may see a pullback, but the major trend looks weak. The counter has been in a downtrend since last 8 to 10 months now, constantly forming a lower top and lower top formation. If you just pull up last 8 months chart, you can clearly see the formation of a lower top and low bottom. So that basically indicates that there could be possibility of a pullback from current level towards 1100 to 1120, but very unlikely to be a sustainable till the time it doesn't crosses above 1140. I won't advise taking any contra bet. I won't advise taking any aggressive contra bet, I would say. But a contra bet can be taken with a strict stop loss below 1040 if somebody wants to take it. Otherwise, it's an avoid.
Okay. So technically not looking very strong. The question is whether the latest development is something to pay attention to. Nirav, purely from the perspective of the company looking to increase its footprint and presence in the defense space, would you say that this is a significant development to sell and to supply artillery guns to the US?
Well, yes. I think for Bharat Forge, it's been that all the divisions have been under pressure. If one were to take into account the automotive business, then the Europe market has shown kind of anemic growth. As far as the domestic defense business is concerned, they were very close to bagging the order for advanced towed artillery gun systems, which is into this artillery space. That was a fairly big order, 4,500 crore orders, which were expected. The government has already issued an acceptance of necessity for 307 such guns. And that is expected anytime next month. Now that has got delayed. It was expected since last August. That got delayed, and I think that could be one of the reasons why we have seen this underperformance in the stock price also. And the third important factor is that they are now looking at aerospace business to drive the growth going forward. So I think it's kind of being stuck up as far as all the divisions are concerned, and that is the prime reason for the underperformance in the stock. This development which has taken place yesterday of supplying artillery to the US could provide a small relief to the stock. But to my mind, I think it will require more than this for the stock to really come back out of its problems. And the real trigger could be the advanced towed artillery gun system order, which is expected from the Indian Defence Forces.
Okay, well, let's see if it is just the first 1 minute, so I think some of these rates obviously will change. But let's wait and watch if indeed there is a large reaction on this one or no. It'll be interesting to see that. Now, the other aspect, Nirav Asher, is a piece that we did on chemicals earlier in the day. So Morgan Stanley, for example, has come out with a note wherein they are saying that a lot of chemical companies might be still undergoing pressure, but the corrective moves have been very large, and therefore they've upped the targets on some of them. SRF and Navin in particular, even though they are underweight on that. They have cut the target price of Deepak Nitrite, for example, but it's substantially higher than the current price as well. You track this space closely because I know you had given us calls earlier on some of the chemical names as well. Is there a con call or an earnings sprint within the specialty chemical space that you liked and you would be comfortable starting to buy or nibble into that business as a house?
Yes, as you rightly pointed out, I think we had covered SRF, and we did make a mention about Navin Fluorine also. And I think as far as the sector goes, there was an expectation that there will be a recovery from the second half of FY25 as far as the chemical space is concerned. But this has not happened. There is a phase where most of the players are going through an inventory destocking cycle, and that inventory destocking cycle is now coming to an end. A lot of companies have acknowledged this also. Companies like Deepak Nitrite, when they spoke about their performance, they have said that agrochemicals, intermediates, and phenolics are rarely they go through a down cycle at the same time. But this is one point of time where we are seeing both these businesses going through a down cycle. And in a way, I think the intermediates generally tend to react with a lag effect. So that lag effect is now coming in as far as the agrochemical space is concerned. So I think from what we have read, to sum up, I think we are likely to see a recovery from the first quarter, Q1 of FY26. And then I think going into the second quarter, things should start improving in a much better way.
Typically the market tends to discount these things 6 months earlier, right? Is this the time to buy into some of those names then?
Yes, definitely.
So which ones do you like as a house?
I think we like SRF. And we like Navin Fluorine. We would like to look at Deepak Nitrite, but I think the stock has been on a downward trajectory, and I think it could slide to close to 1600 levels. That time we would like to have a look at the stock.
Okay, Nilesh, coming on these stocks, I mean the slam dunks have been very swift, particularly for Deepak Nitrite or some of the others, but there's a lot of promise into some of the names, small caps as well. Do you like any of the chemical names on the charts?
See, clearly, out of all the names that you have just mentioned, Navin Fluorine and SRF, these are the two particular stocks that are in fact outperforming within the chemical basket. And structure-wise, Navin Fluorine has good support near about 3850 and 3900 zone. So can be looked at if at all we see any dip towards 4000. So this particular counter can be added with a stop loss below 3800. We might see 4200 to 4300 levels on the upside. SRF on the other hand, where we have seen a good consolidation breakout of multi-year breakout, I would say. It has given a good breakout from a falling channel as well. So structure-wise, SRF is looking positive. A little from a position perspective, I would say it has a potential to test 2900 to 3000. One can keep a stop loss below 2550. That's the 50-day moving average for this particular counter. So buy and decline should be the approach.
Okay, buy and declines is the approach for a few of these select chemical companies. On to the big brokerage call of the day, and we've discussed a few already, but this stands out because CLSA has upgraded NHPC to a high conviction outperform, but it has cut its target price to 117. It's still implying a considerable upside from the current market price of 76. Why are they saying what they're saying? Mihika is joining in to tell you. Mihika?
CLSA has, remained bullish, and it has, upped it up a notch. It's upgraded the rating to from outperform to high conviction outperform rating because of the 25% stock correction in the last 6 months, which has made the stock traded at inexpensive valuations of 12 times its FY27 price to earnings ratio. The target price has been cut, but the cut is minimal from 120 rupees to 117 rupees, and this is only to count and factor in higher capex, but it still offers a 57% upside potential. Now, in terms of the key catalysts for the company, CLSA has noted the start of the Parbati 2 hydro project, which is expected to boost the regulated equity of the company by 27% in Q1 2025. It also notes the entry of the company in shorter duration pump storage space, and it expects a increase in regulated equity by almost double over FY24-28. Just a note, regulated equity is the portion of NHPC's capital that regulators allow for a guaranteed profit on. Lastly, in terms of growth expectations, CLSA expects 79% higher EPS over FY25, FY27, and they also expect the company's return on equity to expand 512 basis points over the same period.
Okay. Thanks, Mika, for getting us those details, and certainly keep that on your radar. You've got the pre-open session that's just about winding up. Any interesting names that you're seeing, Nilesh, based on what you've seen so far? Early days, of course, early minutes, of course.
Right. As of now, I would rather wait for opening session to be settled down, because usually we have seen in last 4-5 sessions, the markets are not sustaining at high levels, and it is similar at the same point of time. We are witnessing a sharp rebound as well from the lower levels. So I would better wait for markets to open at 9:15, and then we'll take a call.
Okay. All right. Nilesh, Nirav, you want to come in on NHPC? Do you see potential here based on and I'm not specifically asking about the CLSA note, but then on your own reading on the stock, do you anticipate that what CLSA says will play out, will indeed play out?
Well, it's like possible, but I think at this point of time we are not very comfortable with some of these hydropower names. At this point of time, we would like to stay away from these stocks.
Okay, then in the power space, does anything stand out? You said you don't like hydropower names. Does that mean that you would like some of the traditional players, maybe some of the renewable players? What stands out to you?
I think we would like to have a look at the thermal power majors, especially the likes of NTPC or a JSW Energy or Torrent Power. But I think valuations will be the key factor to watch out for. Not at these prices. We'll wait for some more correction.
Okay. Nirav, then we've not really asked you about what stands out to you. What are those pockets where you are seeing at this juncture, and we've seen the earnings season play out? If it's not power, I asked you specifically about Bharat Forge, I asked you specifically about Cyient, but none of these have really caught your fancy. What, according to you, should you, and we asked you about the select chemical names as well. What is a high conviction buy in this market for you based on the fundamentals?
I think as we discussed, it's going to be very selective. As we discussed about the chemical names, as we spoke about certain auto ancillary players also. I think one sector which we can look at is the hotel space. And I think it's been buzzing with activity. Yesterday also we started to see good momentum. I think the entire sector is in a sweet spot. And I think some of the companies which we had identified at a very early stage, Taj GVK, Indian Hotels, they continue to perform quite well. Yesterday we've seen some very good momentum pick up in Lemon Tree Hotels, Chalet, East India Hotels. So I think this is one sector definitely to watch out for, because now I think even companies like Indian Hotels, they've started talking about medical tourism, they've started talking about spiritual tourism, etc. So I think it's kind of becoming a recession-proof industry, because You have an influx of tourists. The domestic travel has gone up substantially. So I think we would like to have a look at this space in greater detail. At the same time, as you spoke about the different stocks and different sectors, I think from FMCG we've pulled out Britannia Industries. I think it's got a very good set of numbers. On the paint side, we've started looking at Berger Paints because they had a relatively a better set of numbers. So I think it's a whole selective stock picking which is happening. On the value side, I think some of the stocks which have broken down, we've started looking at Woodco, we've started looking at IGL, Indraprasth Gas Limited. So I think we've been working on those lines, very cautious, going very cautious, and being very selective in our case.
Okay, let's look at some stocks which would be active. So, KSB Pumps is up if I'm not wrong. Could be interesting. Marathon Next Gen has gained a bit. Okay, KSB is not necessarily, but Marathon Next Gen, no. Okay, no, BSE, some of these are up and active. India Glycols as well as BCL Industries as well as Borosil Renewables. I think those are the few others that we should try and see. India Glycols 2% higher, BCL about 4% higher, so not bad for some of these. Borosil Renewables up about 5% as well. Nilesh, your top call for the morning?
Right, so I'm getting a feeling that we may see another similar session that we saw yesterday where few handful of stocks were dragging the main indices like Nifty, and the broader markets have outperformed. So I believe that today again we may see an outperformance to continue in the broader market, and a few stocks that are still looking attractive within defense space. Mazgaon Dock yesterday has given a big spurt. So there could be possibility of a follow-up move to continue towards 2250 to 2300, but advisable to buy on decline if at all it comes near about 2100. That can be a good entry point, keeping a stop loss below 2050. We may see 2160, 2180 kind of levels on the upside. Another stock that is looking attractive is Bombay Stock Exchange, BSE. It was already up yesterday around 9%. But if at all, if we get this particular counter in the range of 5550 to 5600, then it can be added for the upside target of 5800 to 5900. One can keep a stop loss below 5450.
Okay. Nilesh, you named one, of course, but what about the other in the other couple of others in those defense and shipping counters that have maybe rebounded quite sharply? Anything else standing out to you that could see a spurt today as well?
Right. So another couple of stocks within railway space, RVNL is something where we have seen a big spurt. So usually you see a follow-up move after such kind of a spurt, but not advisable to chase these gap-ups. If at all you see any dip towards 360, 365, use that opportunity to initiate a long position. Keep a stop loss below 355 in RVNL. Another stock is SCI Shipping Corporation of India. That is another stock where we have seen a big bullish candle yesterday. So these are the stocks where we may see a follow-up move, but advisable to buy on dips.
Advisable to buy on dips. That's good advice in this market scenario. Stay on, gentlemen. Here's how we're starting off. The question is, how will we end today? Will mid caps and small caps do better than large caps is the key question. For now, starting off with a fair degree of red, I must say. 0.5% off for the banking index. IT should come up on your screen, and let's try and bank is down 0.5%. IT, well, 0.25%, and mid caps and small caps, which did better yesterday. Let's see how they are faring today. Can we get them on the screen? 0.3% for the mid cap index, small cap index 0.5%. Now remember, these days these indices are very choppy in the first 10 minutes itself. So we'll revisit this, of course. But let's get the heat map up on the screen and show you what's moving and what's not. Okay, a little bit of red today, which is good to see. The losers though first. ITC, 2 percentage points lower. I don't see too many other FMCG names out here. So ITC is a bit of a lone ranger. Maruti is down. M&M is down another 1%. So the two auto majors. I wonder if Hyundai would be down. We'll maybe look at that. But I wonder if this is the Tesla effect. Wipro down 1%. HDFC Bank heavyweight down 1%. TCS is down, so IT is a bit corrective in addition to HDFC Bank, which might be putting pressure today on the index. What's doing well? Shriram Finance up about 1%, Hindalco having some gains, JSW Steel is not doing too badly, Cipla, Adani Enterprises, Tata Steel, Adani Ports, Grasim. So that's the list of names. It's steady at about 1/3% in the first couple of minutes. More heavyweight losers, a few gainers if you will, but metals kind of standing out. Reliance marginally in the green, Alex.
So similar trends to what you saw yesterday as well, Neeraj. About a couple of these at least. The IT companies maybe underperforming a tad bit. You saw IT losing ground. Metals were doing okay yesterday. That seems to be the case at the start as well. In fact, let's pull up the sectoral breakup to see what is doing what at this juncture. And there you go, right on top of it. But no major gains, right? Metal pack as a whole gaining about 0.4%, and it's more red on the screen than green. And you have auto that is down about 0.8% at this point. The Nifty Bank also losing about 0.4%. Let's see whether this turns, and it did yesterday, so that's certainly something to watch out for. A few names that you should focus on at the start, and there are quite a few in the way of order wins that are in focus at the start. And let's pull up some of these names. The likes of Bharat Forge, we spoke about the fact that its arm has gotten that order or is going to be supplying artillery guns to the US. Not a very big move. So as Nirav was pointing out earlier today, the headwinds that have come through on the earnings front in the form of several other gaps that need to be fixed may be weighing on the stock. In fact, it's turning negative as we're speaking. Let's talk about India Glycols. It was up and about at the start, and so is BCL as well. Both of these ethanol plays, and they've gotten orders to supply ethanol. So there's something that you should watch out for. You have JBM Auto that has gotten an order worth 5,500 crore rupees. So this is also something that is reacting to the order and is up and about in trade. Let's talk about the management change. We were talking about Cyient and the appointment of Sukamal Banerjee. The stock is gaining about 1.7%, a measured response. Let's see if it builds through the day. We already pointed out that there is action in the derivative space for this particular counter, and watch out for the key numbers that we spoke about at the start today. A couple of brokerage calls that have come through. You have NHPC. We spoke about this in our big brokerage call of the day. CLSA has upgraded the stock to a conviction outperform, but it has cut its target price. It's still implying a significant upside. The stock is up about 1.8%. And Tata Power, HSBC has upgraded the stock and also hiked its target, but it's not doing too much in trade today. And finally, let's also take a look at the cement companies. I've listed out a few. Ultratech Cement not doing too much. Ambuja Cement not doing too much either. Shree Cement maybe also. Let's pull that up. And ACC. So perhaps, as we've already discussed on the morning show, the implications of the increase in petcoke prices, which is of course a key raw material, it may not play out immediately in the fourth quarter because of some of those supply contracts. It may be something to worry about at the start of next year. Neeraj.
Okay, just trying to see what some other stocks might be, which we may not have necessarily marked. I wonder what Zentech is up to today after getting clobbered in the previous few sessions while the small cap index tries to make a comeback yet again. Zen Technologies up 4.5%, so not a bad start for that one today. It should bring up BCL if Alex has not marked it already. I think about 5% higher. So that's not doing badly for itself either. Good move for BCL Industries as well. Clearly some stocks doing way better, especially at the broader end of the spectrum, doing way better than others. So keep that in mind. But opening thoughts, Nilesh, you want to revisit the call that you made, one, and any opening thoughts on anything else, the index or specific stocks?
Well, I think the index are likely to consolidate today, but we believe that the small cap, mid cap may witness some attraction, just like we saw yesterday. So stock specific move is something that we are expecting it to continue. You spoke about metal space. Within metal space, specifically aluminum space, Hindalco is looking good because the stock is making an attempt to cross its 200 exponential moving average. So looks attractive at current level for further upside momentum to continue towards 641 to 650, and stop loss can be placed below 618. Apart from that, we are also witnessing a strong rebound in Keynes Tech. So Keynes, we have seen a constant decline. The stock has gone into extremely oversold territory. Now it is making an attempt to witness a strong pullback. This pullback may extend towards 4,400 to 4,500. With a stop loss below 4,000, this particular stock can also be looked at. And I have one sell recommendation that is coming in the auto space. So auto, by and large, as a whole, is looking weak. Mahindra and Mahindra, this particular stock looks like heading towards 2,650 to 2,600 on the lower side. So it's a sell on rise. Keep a stop loss above 2,750. On the downside, target would be 2,650 to 2,610.
This is the Tesla effect for sure. And, you know, we'll just go to, we'll go to Nirav Ashar on this as well. But, okay, the flashes have just gone off, but I think some flashes from the Adani group on the liquidity cover that they have as well. Interesting, yeah. A trailing 12 months EBITDA of 86,000 crores. That's the group release. And of course, they're speaking about how one is the trailing 12-month EBITDA, of course, but also on the cash flows, etc. Core infrastructure business, 84% of EBITDA, sufficient liquidity to cover debt servicing for at least the next 12 months. Fund flow from operations or cash after tax at 58,908 crores as well. And, you know, independent of the fact that the Adani Group owns NDTV, I think I was looking at a Motilal Oswal note which saw of stocks which have on the Nifty 50, which have derated quite significantly. And Adani Ports and Hindalco are amongst the two names that they believe are amongst the top draws to be bought into post this corrective move in the large caps as well. So that's the other interesting piece, Alex.
Yeah, certainly. Just before you marked that, I was actually pointing out from the key movers today, and this is something that I spotted yesterday as well. Pull up Tata Investment, because this is a stock that is up 8.2% as I speak to you right now. And this is a stock that was gaining in trade yesterday as well. In fact, for the week, if you can pull up the weekly chart, it's up about 20+%. And I'm just wondering what is playing out here. Nilesh, anything that you're seeing on the charts that can explain this?
Well, Alex, if you just look at the volume, the volumes are very dry. So hardly 1,28,000 volumes so far. It looks like less of liquidity. That's why we are witnessing this kind of spurt. And historically, if you see the stock used to trade on upper and lower circuits as well. So there are bits of movement we have seen in the past. So it is better to avoid taking any sort of bet at current level. We may see some profit taking at the high levels as well. And given the kind of fact that we have seen already a jump of 21% in last couple of sessions, so better avoid. It's a highly illiquid counter.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us in the opening piece. Lovely to get your opinion in the session today. Now, viewers, what we'll do is the next 15 minutes, we are going to get somebody whose pharma stock picking abilities have made some of his funds the best performing funds in the past and currently as well. Earlier with DSP-MF, the DSP Healthcare Fund did really well. It's doing well probably even now. But when Aditya Khemka managed it, it did really well. He now manages Incred Asset PMS and the funds are doing well. And it's an opportune time to get